Hello, everybody. Let's get started. We're going to keep this one short today. Tesla, overall markets are down today. Dow Jones down 0.8%, Nasdaq down 1.5%, S&P 500 down 1%, Russell 2000 down 1.1%. Stocks are down across the board today. No, really no sector that's up except for a couple of stocks here. JP Morgan is basically flat. Um, couple of healthcare stocks like UNH and JNG, United Health Group and Johnson& Johnson are up. Pfizer is up slightly. Verizon is up 0.8%. Utility stocks are down substantially. GE Vernova is down 4%, and Constellation Energy Company is down 3% today. Stocks are basically pulled down by the Max 7 again. Max 7 continue to be overpriced, in my opinion. Tesla is down 5%, Google is down 3%, Meta is down 4%, Broadcom is down 3, Nvidia is down 2, Microsoft down 2, Palantir down 3, Oracle down 2. So across the board, I mean, even IBM is down 3. Yeah, across the board, stocks are down quite a bit today. Tomorrow, we have the Fed meeting. That is, the Fed meeting started today, and then they're going to announce tomorrow in about 24 hours exactly. Um, Most traded stocks are Nvidia, Google, Tesla, Amazon. XPeng is down 8%. And then treasury yields are up a little higher on the 30-year yield and then down across the rest of the curve. 10-year treasury yield is down 1 basis point to 4.3. 5-year treasury yield is down 2 basis points to 4.07. So 10-year, 5-year, where really, mortgage rates, auto loan rates, new car, used car is centered, is still high, above 4% for the economy to have any sort of a pickup. This morning, we got some results from housing starts higher than expected, 1.5 million. Building permits also slightly higher than expected, but it's really the starts. So the permits are as expected, basically, and down from prior month, from January. And housing starts are much higher than expected. So that's interesting. So the permits have slowed down, but starts continue to surge. So that also kind of indicates that the construction employment is not falling off a cliff, but it may slow down. Let's just put it that way. Also, it's probably better to kind of look at this housing starts on a longer term period. So let me just see real quick. Authorized but not building permits. Authorized but not yet started. Housing starts. Okay. So permits are at a normal level. They're not at 1.5 million. They're basically at the level of kind of late 90s, but not as high as when we had a housing bubble. And they're not as depressed as early 2010s. And they're not at recessionary levels. They're kind of like, at break even level for economic activity. And then authorized but not started are at very high levels, but this is a minor indicator. Authorized but not started. I actually never heard of this one before. I just saw it for the first time. That's about 276,000 units. And it's higher than in 2005. Authorized but not started. Interesting. And then starts. So the first one was permits. The second one was authorized but not started. And now units started. It's at kind of mid 1990s level. and it's at pre-COVID levels. So again, a kind of a break-even level for the economic growth. Okay, so that's that. Maybe we can get back to that later if we have time. On top of that, we have export prices came in at slightly positive 0.1% in February, but import prices was high. Import prices for February were 0.4%, and even excluding oil, it was at positive 0.3%. So that's obviously not in line with the 2% inflation target. So import prices, as you might have guessed, are probably affected by a worries about tariffs, and the Fed isn't going to like that. Although it's a very small part of the economy, export imports in the U.S. at least. Industrial production is up 0.7% versus expected 0.2%. Capacity utilization is higher than expected at 78.2%. Oil prices are down 1% to $66.70. Yeah, these oil prices are really interesting. I mean, these are not really sustainable levels for oil producers. So I don't know how long they can stay down here, but this is for sure a disinflationary trend. I mean, year over year, last year about this time, oil prices were about $80 per barrel, and now they're $67 per barrel, below 70. So that's going to be at least a 10% um, on energy prices, oil, gasoline prices for the coming months on a year-over-year basis. Okay. The March inflation is expected to be 3%. Core CPI is expected to be 3% for March, year-over-year change. And the core PCE is expected to be 2.5%. That's really the problematic part for the Fed. So the Fed is going to announce tomorrow. And I'm curious what they're going to say. My guess is that they're going to point to some inflation expectations in the near term rising, but the market data showing still well anchored inflation expectations in the longer term. So at this point, I think the Fed will want to wait until they see some clarity around tariff policy on April 2nd. We're going to get some clarification. It's only 2 weeks away. It's March 18th today, only 2 weeks away. So right around this time in 2 weeks, we're going to find out which countries are going to get what rates, what products and services are going to get tariffs, and we'll see by then which countries drop their tariffs. That's really the question right now in the near term for stocks is which countries are lowering their tariffs as opposed to which countries will have to face. So there might be, I've noticed that the Truth Social posts have really dropped on tariff talk. And every day that we don't get a Truth Social post about how this country is going to see the end of the world because they're going against US is a good day for the markets. But I would attribute the recent kind of the pause on the plunge of the markets to that for now. But I suspect there's more pain ahead. I think there's more pain ahead. I don't think 10% correction in the markets is big enough for Trump to change course on his tariff policy. And that means for the next couple of weeks, uncertainty will continue. And then we'll see what happens after that. Markets overall are down about 1 to 2% across the board, but led by Max 7. Let's read our usual summary of the day. In the meantime, we have NVIDIA annual event going on. I don't really expect much from NVIDIA. Talk Jensen today. There's not much the CEOs can do most of the time. uh, regardless of how prominent they are or popular they are. Not much they can do to kind of counter the underlying fundamentals of a business. And this is true for Tesla, and it's also true for Nvidia. And you know, that's what it is. So today we got some news on Nvidia. I'm going to pin this news up here. Actually, I'm going to first pin the YouTube link up here. If you could please take a moment to head over to the YouTube channel and give it a like, I would appreciate that. That helps the channel and the ad revenue. So here's the link at the top of your screens. This is episode 300, by the way. Congratulations, 300 episodes. All right. I'm going to monitor the NVIDIA news at the same time. If there's anything, I'll report it here, but I don't really expect much of a news here from NVIDIA conference. If anything, that's probably a bit of a buy the rumor, sell the news type of event. 1 second. All right. 1 second. All right. Give me 1 second. All right. Let's read this Reuters news. Wall Street falls on tariff worries with Fed meeting in focus. Wall Street's main indices were lower on Tuesday on worries about economic impact on U.S. tariff policies ahead of a monetary policy decision from the Federal Reserve. The Fed's two-day rate-setting meeting kicks off on Tuesday, and expectations are the central bank will keep interest rates steady, and according to data compiled by LSEG. Several U.S. central bank officials have cautioned against hasty moves and said they would wait for data to see the impact of tariffs before making any policy shifts. I don't think the Fed knows exactly how this trade policy is going to play out, said Brent Shute, CIO at Northwestern Mutual Wealth Management Company. The markets were taking a pause after all three major indices gained more than 2% each over the past two sessions as investors capitalized on discounted US equities following last week's sell-off. The S&P 500 had tumbled more than 10% from its February peak, signaling the benchmark index entered the correction phase. The blue chip Dow is trading close to correction levels, while the tech-heavy Nasdaq confirmed it's in a correction on March 6. Communication services led sectoral declines on the S&P 500 with a 2.7% drop. Alphabet fell 3% after the company said it would buy Wiz for about $32 billion in its biggest deal as the Google parent doubles down on cybersecurity. Nvidia declined 2.3%. The company is expected to reveal details of its latest AI chip at its annual software developer conference. Tesla fell 4.2% after brokerage RBC trimmed its price target on the EV maker's stock, flagging the company's losing market share in China and Europe. Other mega caps slid, with Amazon.com losing 1.8% and Meta down 4.3%. Investors flocked to safe havens assets, with gold trading at a record high after crossing $3,000 per ounce for the first time last week. On the data front, manufacturing production increased more than expected in February. Declining issues outnumber advances by 2.4 to 1 ratio and NYSE and 2.5 to 1 ratio on NASDAQ. Okay. The other thing I want to mention here is Amazon is now selling, according to the information, which is a great source, by the way. According to the information, Amazon is selling its Trainium chips. I believe this is Trainium 2. Trainium 3 is in development. This is at the top of our screen, this news. which provides the same compute power as H100. Same compute power as H100. Okay. So H100 is obviously Hopper. NVIDIA is on to the next big thing, Blackwell. And Amazon is also developing Trainium 3, which is supposed to be 4 or 5 times more compute power than Trainium 2, which is what this article is about. Same compute power at 25% of the price, so 4 times compute price efficiency. So this is yet another indication that NVIDIA's leadership in creating these chips, AI chips, is shrinking. Just like Tesla's leadership in building EVs shrunk at a much faster pace than people realized. Even I realized. And I think a similar thing is going to happen to NVIDIA. You know, people talk about a software monopoly with CUDA, but I don't think that's the case. I don't think that is a software mode for NVIDIA. I think DeepSeek showed that you can build models that are very competitive without using CUDA, without using NVIDIA's top chips. And the numbers that the amount of money, profit NVIDIA is making so large, tens of billions of dollars, 70, 80% margins, so large that there's definitely motivation on the side of Microsoft, Amazon, Google, and others to create alternative solutions to CUDA and NVIDIA chips. Now, we've seen two companies, Google and Amazon, able to do it. Microsoft is working on its own. OpenAI is working on its own. Um, and Meta is also working on its own chip as well. They acquired a bunch of companies, bunch of staff, and it's doable. A couple of companies did it. The others will do it too, which means NVIDIA will not be able to charge the gross margins that it's been able to charge up to now. And those gross profits and net profits are going to shrink very rapidly in the coming years, in the coming quarters. And to the extent that NVIDIA is buying back its stock at these elevated levels, while the CEO sells his own shares, which is ridiculous when you think about it. I mean, that should be criminal. That actually destroys, buying back stock at elevated levels destroys shareholder value. So that's the way I see it. While NVIDIA folks talk. NVIDIA stock is down 1.2% as the event starts. It's been about 20 minutes, I believe, since the event started. We can see if there's anything being said here. Gene Monster says, Jensen's keynote preview. The products announced today have been well telegraphed, including GB300, Rubin, and Vera CPU platform switch. While investors may perceive the keynote as expected, I believe these updates are foundational elements that will drive the AI trade over the next 2 years. The key takeaways is that NVIDIA's GPUs remain best in class and are improving further with Rubin. Hyperscalers, application providers, industrial players, physical AI, and sovereign entities all need these chips. Additionally, positive news from TSM last week, reporting February sales that indicate that March quarter will finish above the midpoint of their guidance. Suggests that AI hardware trade remains strong. The specifications of Rubin will be a major point of focus today. For those playing buzzword bingo, and expect we hear the word reasoning more than agentic, recall that on February 26th, Jensen stated that reasoning models would require 100 times to 1 million times more compute power. I believe Jensen is correct in asserting that reasoning will increasingly drive a 100 times increase in demand for compute. If this holds true, the company will return to reporting impressive upside in calendar year 26, so next year. The street is currently forecasting 60% top line growth this year and 25% next year. I believe it will be 65% and 35% respectively. Yeah. Okay. Okay, Gene. Let's see. Time will tell. So Gene thinks reasoning models. So Gene takes what the management said about reasoning models that they will require orders of magnitude more compute power. But yeah, I don't know. I think the maybe the main underlying thing we disagree on is how fast these AI models are adopted by the general public. Like you could have made the same argument a few years ago about Tesla. That Tesla will continue to produce the best vehicles, has the best charging network, and eventually all transportation will be electric. You could have made all those arguments, but then it turned out that there was an alternative, EREVs, that gives you most of the benefits with a lower cost and also better at range. So if Amazon's Trainium 2, Trainium 3 chips are, compute the same compute as Amazon's AWS CEO said as H100, which came out only about a year ago, which scaled only about a year ago, early last year. H100, H200 was a 2024 story. So in less than a year, Amazon was able. This, by the way, Amazon just started doing this. Nvidia has been doing chips for a long time. So the fact that they can do it in less than a year, the same compute and sell at 25% of the cost, 25% of the price of an H100 is a stunning accomplishment. I mean, 2 years ago, everyone wrote Amazon off in their AI developments, including me. Even I wrote them off. I was like, we discussed it here with Meta and Wes. We said number one company, Nvidia, number two, Google's TPUs, and Amazon's a far distant. I actually listened to the earnings call, and the management was talking about how they kind of, they had initiatives and everything, but I didn't think anything was come off of it. And I was wrong. Amazon management proved me wrong. They um, far exceeded my expectations in terms of developing these Trainium chips, and now a formidable competition for Nvidia. So, and in today's world, as opposed to last, 5 years ago, when we had 0% interest rates, when everybody and their mother was raising money at 0% cost, all these venture capital firms throwing money at startups, buying GPUs in mass, and that's the one way they attracted some of the investments, some of these startups. That's no longer the case. A lot of venture capital firms are closing down. Money is expensive. You can't really borrow money to sustain these things. Even Microsoft is now quietly pulling the plug on some of its data centers. Um, and I just don't think, I think they gave it a shot, but they weren't able to uh, build a competitive moat, like a durable competitive moat with OpenAI. So if I cancel OpenAI, my ChatGPT subscription today, and start instead using Gemini more or Grok more, my quality of life would be the same. It wouldn't really change. So, and a lot of the like most people, 99% of the people around you can't tell the difference between the free versions or the paid versions. They wouldn't be able to tell the quality difference. So that what's the point of paying for these things? So I don't know. I mean, Wes says that it doesn't matter what the 99% do. What matters is what the 1%, the top percent of engineers and companies use these bleeding edge AI models. How did they use it? But see, I don't think we're seeing a massive improvement there, like order of magnitude, life changing improvement there either. I'm still getting the same, basically the same ads on Facebook, Instagram, and Meta is supposed to be the one that's using these AI models the most. And Tesla, FSD 13 is about the same performance as FSD 12. And FSD 14 is going to be about the same performance as FSD 13. And 99% of people won't be able to tell the difference. if you get in a car today, if you get in a car today, a Tesla that has FSD, like, and I asked you after the drive, which one does it have? 99.9% of Tesla investors, let alone the general public, would be able to tell the difference. When it comes to general public, if you ask them, did you just use FSD or autopilot? They would not be able to know the difference. Most Tesla owners don't know the difference. And these people think that, you know, the masses are going to pay $8,000 for the 13.8.5. Give me a fucking break. Steven?
Hey, Iman, the one thing I want to say about the ChatGPT subscriptions was that your data, when you cancel the subscription, the data, you can't transfer it to another model. So if you've been with ChatGPT for a year, all that data is going to be lost.
What data?
The data, like every question that you ask it, the data that it uses to form kind of who you are, what you do, and how it tailors its answers a little bit to your profession, whatever it may be, like that type of data.
I don't think that matters. I mean, basically what you're talking about is just a few things that it knows about me, right? And I can delete those things and I do delete some of them. Um, and I can rebuild a relationship with another person. So, obviously there's value to having a friend that you've known for decades, but um, it wouldn't take decades to form a similar relationship with someone else, right? It would take a little bit of time, but if it means saving, $2,000 a month that ChatGPT is not asking for, it's more advanced, or $20,000 a month or a year, whatever it was, for its advanced models, and somebody else can provide it for 10 times cheaper, I will take the month or 2 months that it takes to build that relationship, and probably wouldn't take that long anyway. So, um, yeah, I think what we're going to find out increasingly is the more ChatGPT tries to charge for its models, the more people are going to be disappointed how the uptake is. I mean, look at Tesla. They went from 199 to 99 with no increase in uptake, none. And if they go to 49, it's going to be the same. And they're going to have to go free to see any sort of material uptake. And at that point, it's like, okay, well, number of subscribers increased, but you're not able to charge anything. And by the way, it's not zero to maintain these things either. The hardware takes a little bit of money. You have to depreciate that. Each training turn costs millions of dollars. Each time you send it to your fleet, that costs money. There's maintenance of these things, the warranties of these things. So people think FSD is 100% margin. It is not. So, and now the Chinese automakers are including them for free, which means how in the world Tesla is going to be able to charge in China? Tesla doesn't make any money in China, so that's why I think as the Chinese automakers continue to take market share away from Tesla, lowering Tesla's factory utilization, Tesla's costs are going to increase in China, and prices are coming down, and Tesla already doesn't make money. So I think we're only a couple of years away from Tesla exiting the Chinese market, just like many legacy automakers did. So, yeah, I think that's the inevitability. Tesla's down 5% at $226 per share. There's a possibility that Tesla stock may close down at lower than last Monday's 15% plunge. And a plunge like that, you would expect some sort of a dead cat bounce for a few weeks or a couple of months. And we're not getting that right now. Tesla stock is very weak. It is priced at $700 billion. The company has no growth, no profits, and no prospects. So I have no idea why the stock is still worth $700 billion. I don't get it. I think it's going to drop below $200 billion. And if there's a recession, which I think is more likely than not, and it's probably already started, um, that's going to go below $100 per share. XT.
Yeah. Did you see in the comment section? I just pasted that the Swiss are already cut rates. They're down to 0.5%. So I think they're quite worried about the economy. So it seems, I mean, and they're already talking about, are they going to do another cut down to zero, which, I mean, negative interest rates? It's quite insane, to be honest. Already
Yeah.
has to be some serious issues if they're cutting that bad.
Yeah, I don't know. I mean, it's a global economy, but every country has their own problems and positives and negatives. I don't know the Swiss economy very well, and it's not a big enough economy to be consequential to our discussions here. As we talk, the yield curve came down a couple basis points, actually. That's interesting. Not sure what happened at 130. Maybe some sort of treasury auction. Let me check that real quick. In the meantime, there's some NVIDIA headlines. NVIDIA CEO says almost the entire world got it wrong. The scaling law of AI is more resilient and, in fact, hyper-accelerated. The amount of competition we need at this point as a result of agentic AI and reasoning easily 100 times more than we thought we'd need at this time last year. NVIDIA says top 4 hyperscalers have bought 3.6 million Blackwell chips in 2025. Top 4 hyperscalers have bought 3.6 million Blackwell chips in 2025. So let's see how much that is. Give me 1 second. 3.6 million Blackwell chips. They're going to be priced around 30 to 40,000. So we're looking at about $100 billion. $100 billion in 2025. And NVIDIA's revenues are about $160 billion run rate. So, I mean, NVIDIA's revenue will continue to grow, but at a declining rate. And this data point is in line with that. And also, I suspect some of these will, like, they may be at a discount, they may get canceled later. So I don't know. Putin orders pause strikes on energy facilities. Okay. NVIDIA says this year we're going to talk a lot about agentic AI. Okay. Also says last year was the first year back that we did this live, and it was like a rock concert and described as a Woodstock of AI. This year it's described as the Super Bowl of AI. Okay. He's so focused on marketing. That's one thing that really rubs me the wrong way. I wonder if he's going to be signing boobs again this year. Nvidia stock is now down 2.3%. Tesla is down 5%. We read the Reuters article. We went over the macro data. Okay, let's see what else. The differences between Trainium 2 and Trainium 3. Trainium 2 is currently available at 25% of the cost of H100, so 4 times cheaper. And Trainium 3 is in development. That's coming next year. Trainium 2 performance delivers up to 1,300 teraflops of a floating point 8 performance. Trainium 3 expects to offer up to 4 times the performance of Trainium 2 with a 40% improvement in energy efficiency. Trainium 2 memory, 96 gigabytes of high bandwidth memory with a bandwidth of 2.9 terabytes per second. Trainium 3 will be fabricated using a 3 nanometer semiconductor manufacturing process, enhancing performance and efficiency. But we don't have information on the memory, looks like. Available in late 2025, so it's actually coming late this year. Let's see. We also have reports. We also have reports of attacks on Teslas accelerating in Las Vegas and Kansas City. I'll put a couple of these up here. Several vehicles set on fire in a Tesla in Las Vegas. You can see the fire at the top. Also, 2 Cybertrucks damaged in fire in Kansas City Tesla dealership as well. Okay. Performance actually 4 times. Memory is TBD. Memory bandwidth is TBD. Scalability is TBD. Liquid cooling for Trainium 3 and expected 2025. All right. So we don't know much about Trainium 3 then. Steven, anything on your mind?
It was just about the increase in violence that you're seeing towards Tesla. I just wanted to say that you're also starting to see additional protests in Texas, where typically no one protests in Texas ever, except for maybe Austin. But they got them planned this weekend in San Antonio, and this is the first time I can remember anyone protesting anything in Texas. Usually, no one says a word. It's just
Yeah. There are hundreds of protests on each Saturday under the name Tesla Takedown across the world, really. Audi, other headlines: Audi cutting jobs after weak 2024. Honda getting batteries from Toyota. NIO and CATL form battery swapping standards. So CATL is kind of expanding into battery swapping stations now, which is really interesting. Impressive performance from BYD's new EV platform. Xiaomi raises sales forecast by 50,000 units. Look at that. I wonder where that market share is coming from. So Xiaomi, who has just entered EV production with SU7 competing against Model 3 and Model S. I mean, this is Model S performance at Model 3, less than Model 3 prices. So obviously it's going to kill both of those products in China. And it did. It took only, it's in less than 1 year, SU7 sales started exceeding Model 3 sales. Even the new Model 3 wasn't able to stand up against SU7. And that was the first EV Xiaomi ever produced, which is incredible. That kind of production ramp in the first EV, kind of like looking back on the last 10 years of Tesla, how much they had to go through to ramp these products, how many iterations they had to go through, and Xiaomi just nails in the first try. And now they're having their second try with YU7, and that's also going to kill Model Y, obviously. And I suspect it's already having an impact. Even though YU7 isn't up for sale until June, I suspect many people are waiting, skipping Model Y to buy the YU7. And that's why Tesla just started offering 0%, 0% interest-free loans to sell the new Model Y. In China. And that's for 3-year loans. And then if you have 4-year, 5-year loans, it's a low interest rate. So that's just incredible to me. And I think the same will happen in Europe and rest of the world. And US will have, yes, there's less competition because because of government protectionism. The Chinese products aren't sold in US or Canada, so Tesla is protected in US both by the Biden administration and Trump administration. Ekti?
So, do you think there's any point in proceeding with the battery swap when BYD just released 5 minutes charging? And also, what? How is it possible that Chinese has leapfrogged Tesla in such a short amount of time?
I think, I don't know. I think there's like bigger reasons for that that are kind of relate to the last couple of decades in the US. I think the US, after 9/11 attacks, I think the US really restricted importing talent into the US. I think it was ridiculous that the US was capping these H-1B visas and training these people and sending most of them back to their countries because they didn't win an H-1B visa in the lottery system. I think that's insane. I think that was a major mistake that still continues to this day. So that's been happening for the last like 25 years. And so, these people got the education, quality education in US. They got a couple years of experience under temporary visas, and then they went back to the countries, and then they started competing with the US. And that's been happening for the last 2 decades. And the Chinese, I don't know. I don't know. You tell me. That's my
I'm
take on it.
That's a great point, but I also think that we haven't the US haven't invested in manufacturing in quite a long time, so that's probably also another reason. But I'm quite impressed by the new Xiaomi cars. It's incredible that it's their first car, and it looks pretty good. So,
Yeah.
what do you think about the battery swap? I think it's useless if BYD delivers on this 5 minutes charging. It's incredible.
It looks like they are delivering. So I was looking at, so they announced 2 cars are going to have this thing, and those cars are up for sale in a few months. Like, it's not like these are few years out promises. Like when GM says we're going to exceed, Tesla in 2025, like 5 years ago, or VW announces solid state batteries, or Toyota, whatever, but it's coming like 10 years from now. It's not like that with these companies. They're ready to go. They're ready to ramp production, and they're going to ramp production very fast. And also, I think Tesla was unable to vertically integrate into battery production. So BYD is vertically integrating its own battery production, battery research, and was able to out innovate Tesla. They're not just copying US companies anymore. They're out innovating these companies.
Yeah, quite similar to what happened to Japan. First off, they were copying everything from the US, and then later on, they made their own cars. I watched a documentary from Shenzhen, and there were some companies from Europe that were moving to Shenzhen just because they could get parts so much faster to make prototypes. So they were like, just how much faster it is, something that takes them 3-4 weeks in Europe, they can do it in like a few days in China. So they just moved over there because they want to compete. It was something in robotics. It was a few years ago.
Yeah.
So I guess, yeah.
Do you ever see it reversing at all, or do you think this is just going to continue, this kind of trend?
Of what?
Do you agree that Tesla will exit China, for example?
Why do you think they would exit China?
Because they lose money.
Yeah.
And that's at full capacity. Giga Shanghai is producing at full capacity, and Tesla loses money in China. So that means as they continue to lose market share, and they will lose market share, make no mistake, Tesla will continue to lose market share in China. As that happens and factory utilization declines, Tesla won't be able to spread its fixed costs over the 2 million vehicles that it produces, or sorry, the 1.2, 1.3 million vehicles that it produces in China every year. So as it has, for example, like it has in some other countries, some other factories, um, the cars will get more expensive to produce. You have to stay on mute as I'm talking. The cars will continue to get more expensive, and the prices will continue to. So the production costs will continue to get more expensive, and prices will continue to decline, which means negative margins for Tesla. So how is that going to work?
But I mean, uh, the brand isn't doing so well in Europe or in the US, so it seems. So if you exit China, what do you have left?
Well, that's my point, right? That's why I'm short.
Well, I think you're smart being short.
I think the only place that's left for Tesla right now in automotive is US, and that's because like US and Canada is already also getting kind of crushed. Canadians are removing benefits provided to Teslas because of what all the politics that are going on. So, I mean, look at this headline: China exports growing rapidly. This is a Bloomberg headline that just came out. Cheap Chinese cars are taking over roads from Brazil to South Africa. Trump tariffs look powerless to stop the incursion of inexpensive cars from China and may speed it up. So BYD is doing a factory in Brazil. They're also doing one in Turkey, and they're going to be producing cheapest cars. Like they're actually going to start taking share from Toyota as well. It's really has kind of reduced the market. Entire market has reduced to Toyota hybrids and BYD hybrids and EVs. And Tesla will never produce a hybrid. Tesla will never produce a hybrid. Tesla will never do an e-rev. And BYD is also, giving away its ADAS system for free now, and other companies as well. Steven?
Iman, you mentioned the visas before and after the 9/11 attacks. I was wondering if you could just elaborate a little bit, if you knew any more about how restrictive they became and if it was across the board or only from specific countries.
So basically what happened was these H-1B visas, the Congress put a cap on them. It was very low. I think this happened after 9/11. And then, and I came to this country in 2003. So you go to school for 4 years, graduate 2007. And, you have to go through a lottery system. And to get a work visa, this is H-1B work visa. And during that process, you're in, under other visas or extensions like a CTA or OT. What was it called? EPT, OPT. Okay, at least that was what it's called when I was kind of going through it. And they have different kind of regulations a little bit. You can extend your stay and still work at a company under those extensions while you go through the process, and the company sponsor you for it. But the H-1B was based on lottery system, and the US was getting 3 times, 4 times more applications than the number of visas available. So your employer, put yourself in the employer's shoes. Okay. In the first year, no employee really benefits, especially a young employee that just came out of college, really benefits your company. They don't benefit your sales or relationships. They kind of do the grunt work. That can be done by anybody, really. You know, so you're putting all this time, 1 to 2 years of training for them. You're losing money on these people for 1 to 2 years, and that you have 1 in 3 chance at most of keeping this person after you put all that time and training into them. So it's no wonder why most employers did not hire international folks. They don't want to deal with it. Only the biggest employers, global firms that have dedicated legal departments, could afford to hire these people, international folks. Because what happened was, for example, at Ernst & Young, let's say that you went through the process and you didn't get the visa. What Ernst & Young did was, if you're kind of promising employee, they would place you to their office in your country and then apply for it again next year. And then if you still want to come back, then you could kind of work it that way. They find a way because they had legal departments dedicated to this. But most employers are smaller. They don't have the dedicated legal departments that experience that it can keep up with the regulations and everything. And so they just didn't bother. And in the Great Recession, when a lot of people are getting laid off, you had up to like 1 million people getting laid off every week. Bank of America said that they are prioritizing Americans, like people who are born in this country, and laying off the others. I mean, that's literally discrimination. That's discrimination by country of origin. And that was for the early 2000s. That was the case. And so it's no wonder why most of these people went back to their countries and started their own companies. I mean, I know somebody who went to Duke, and extremely bright person, just like like extremely bright person. Okay, top of her class. We went to the same high school. Top of her class at the best high school in Turkey. Came to Duke, I believe, with some scholarship, and that worked at Lehman Brothers. Put aside the fact that Lehman went bankrupt, obviously has nothing to do with her. She worked in investment banking at Lehman Brothers for a couple of years, and I think she did Harvard MBA after that. I'm not positive on that, but then she went back to Turkey and started doing private equity in Turkey. And she could have been doing private equity in US. She could have been, investing her time and talent into US companies. And instead, she's doing this in Turkey. And she's not the only example of this. I mean, there are a lot of examples like this. People were trained, got the top experience, top quality education, and then went back to their countries. So that H-1B cap is insane. It's ridiculous. It's nuts. I think there is something to be said about. I think people, like, some of these political discussions around this topic is just way too short-term focused. Like, yes, when she is given the job at Lehman Brothers Investment Banking, yes, an American, let's say, is not getting that job. Okay. But let's put aside the fact that she would become an American citizen in a few years if she was given the job. So she would be an American at the end, right? She would be a naturalized citizen. But even if that's not the case, when she comes here and she adds her talents and time into companies, to developing companies that creates world leaders, those companies generate jobs that then benefit Americans. So if you extend your time horizon in this discussion to just 5-10 years, just beyond the next few days, then you clearly see the benefit of these H-1B programs and the detriment of having an H-1B cap. So, Stephen and Ekti.
No, Yaman, I just want to say thank you for explaining that process, because I think it perfectly illustrates why we would be so far behind a country compared to like China, because who would want to come here when it's such a pain in the ass to get here to begin with? So thank you.
Okay, Ekti.
This makes perfect sense because I have a friend who moved from Scandinavia to the US, and he's super talented. He's really amazing at his job. And he told me how much stuff and papers he had to get just to get the green card and the visa. He even had like recommendation letters from the top executives in one of the tech companies. And he told me like he went through lawyers and all this kind of stuff to get the papers, and it cost a huge amount of money. And it's kind of insane because companies wanted to.
It's not just the money, right? Like, yeah, it is the money. It was only a few $1,000s when I went through the process, for me at least. It's not just that. It's also the fact that, for example, you're so focused on your work at the job, at the office, okay, and the next guy is also this, obviously. But now you're also dealing with this paperwork, as you just mentioned. There's a lot of paperwork. You're also dealing with the back and forth with the legal department and the lawyers. You're on the phone with them for a half hour, 1 hour at a time. They're asking questions, you're answering questions, and you have the stress of that. You don't know you're going to be here in about 2, 3 years. So you can't buy a house. You can't make long-term investments. So a lot of these compound and the stress. I mean, I would be waking up in the middle of the night and the stress was just insane. I mean, I'm not going to go into details, but it was really insane. So, you know, so it's really heartbreaking because a lot of times these students from my college call me up, they call the alumni and everything, and they ask for guidance. Like, you went through this, how did you go about it, etc. And I can't say anything to them other than share the facts and give them the real dose here. And I kind of just try to say, look, you're starting from behind. There's no question about it. There is no equality when it comes to this stuff. You're starting from behind. You're starting the race from behind. It's a 100 dash, and you're starting from a few steps back, maybe many steps back. And maybe you won't win the race. Maybe you won't get. I mean, it's highly probable that you won't qualify for this visa because literally by chance, it'll allow their system. How stupid is that? Okay. But the fact is, you're now dealing with things that most people will never deal with in their lifetime. And you're developing skills through this process that will benefit you through the rest of your life, whether you end up in this country or another country. So don't worry about too much. Try to do your best, have a backup plan, and try to don't worry too much. In a year or two, you're going to be over it and you're going to be better for it either way. So that's the way I kind of explain to them. And I think that seems to help. Steven?
Yes, sir. Excuse my ignorance, but can't you just stop, working and go get or stop, going to school and go get a job whenever you want? Because that's what Elon did, and everyone was fine with that. He didn't do the visa process. He just kind of did what the fuck what he wanted.
Well, I think it was different back then. I think in the 90s, US had its best decade, in my opinion, in many areas. And US's influence in the 90s really spread around the world, both kind of militarily, also culturally. And so I think throughout the 90s, people kind of started coveting coming to the US a lot more than in previous decades. And after the war, it kind of slowed down a little bit. Every time there's a recession, like I think we're seeing the same thing in the last couple of years here, where the rest of the world slows down and the US exceptionalism shines again, and kind of like in 1999. And so that brings up another generation of immigrants trying to get into this country. So this H-1B cap is a recent thing. I don't think it was. I don't think it was an issue when Elon was coming. Ekti?
Yeah, so Trump and Putin are having a talk today in regards to the ceasefire. So what do you think? Could the market boom after the ceasefire if they get it done? I mean,
I don't think that's a material event because like there might be some food disinflation, I guess, but I don't think I think it's kind of expected that this ceasefire is coming anyway, and I think the markets kind of got used to having wars in Ukraine and in the Middle East in the last couple of years. I don't think that's the main event. There might be a bounce. Who knows? I don't know, but um, I think overall markets are dealing with other headwinds that are stronger. Let's see. Anybody else? Any other questions, comments? Please request to speak. We've been going on about an hour, and I'm happy with an hour. Maybe even reduce it to half hour from now on. Kind of go through things quickly. Tesla stock is down 6%. I think there's a chance that it might close down lower than the 222 close on Monday, last Monday, after the 15% drop. Um, okay. Let me see if there are any headlines on Tesla that we want to talk about. GM has selected NVIDIA to build its self-driving car fleet, NVIDIA Jensen Huang says at the conference. Interesting. Interesting. GM stock is down 1% right now. They're obviously dealing with tariff issues. They're going to be one of the most hit from tariff if there's no exceptions for automotive industry, which probably there will be. Let's see. Copper stronger than associated equities. Okay. Last year was the first year back. We did the slide. We talked about that. Last week in markets, investors are more bearish than expected. Sentiment is even lower than the 10% drop in S&P 500. Concerns about the job market are growing. University of Michigan data shows unemployment fears at their worst since 2008. Wage growth is nearly existent. I guess that's expectations because wage growth is actually higher than inflation right now. It's at 4%. Inflation pressure isn't easing yet. Core PC is expected to rise 0.32% in February. Okay. NVIDIA CEO says, what I'm about to show you is Hopper shipments to the top 4 CSPs, the ones with the public clouds, Amazon, Azure, GCP, and OCI, comparing the peak year of Hopper and the first week of Blackwell. You can kind of see that, in fact, AI is growing through an inflection point. Okay, so in 2024, they ordered 1.3 million Hopper GPUs. In 2025, they ordered 3.6 million Blackwell GPUs so far. 2 GPUs per chip. Okay. US says talks for full Ukraine ceasefire to start immediately. Okay. We talked about Amazon's 25% of the cost of H1 on the GPUs. So the volume to top 4 US CSPs is increasing from 1.3 million Hopper to 3.6 million Blackwell GPUs. I need to think about that a little bit more. Let's see if we can get some more color on that. Janssen announced a deal with GM for NVIDIA to power GM's autonomous future. However, I'd be surprised, said Gene Munster, if anything significant comes from GM's autonomy efforts in the years ahead. Catching up to Waymo and Tesla is difficult in what is largely a winner-takes-most market. That said, I believe the autonomous industry opportunity is meaningful for NVIDIA. While it accounts for about 2% of revenue today, it will likely reach double digits within a decade. That sounds like confirmation bias on both paragraphs there. Jansen addresses the elephant in the room. His bold comment from last earnings call that reasoning AI will require 100 times to 1,000,000 times more compute. He argues that reinforcement learning and reasoning require models to work step by step, with each step generating 10 times more tokens that must run 10 times faster. Gene's take is this theory makes sense. My use of reason models takes 1,000 times longer than one-shot prompts. If that reflects the amount of capital and compute needed, then his bold comment passes the back of the envelope test. Okay. Monster is also very big on he's been saying that the deliveries estimates have dropped sharply in recent weeks for Tesla, and analyst consensus estimates haven't dropped as much. So he expects continued downside risk for Tesla stock in the next few weeks here. Ekti?
I find this so strange that they're talking about reasoning models and stuff because AI doesn't reason. It's a probability model. So that's why it also makes mistakes and does hallucinations because it can't reason. So I think maybe that can happen in 10 years, who knows, but talking about it this soon is just, I mean, I find it insane, to be honest. So I mean,
Yeah,
you
I mean,
can't.
it's just the name of the thing, right? So there are reason models in the sense that they kind of think they take longer to think a little bit. Um, like these things can run for minutes if you do a deep research, and sometimes tens of minutes. So,
But
but the
have you
thing is, like, how many people are really going to use those deep reasoning, deep research models? And I just don't think it's going to um, catch on like fire as ChatGPT did in 2022, 2023. I just don't see that happening.
what if it gives you wrong answers also? Would you trust it?
Yeah, it's not 100%. None of these things are 100%. I actually tried some of these deep research ones for my specific use cases, and I'm like, there's no fucking way I would even use this. I mean, I looked at the result, I looked at the reasoning throughout the, like, for lack of a better word. Okay, they call it reasoning. I call it reasoning for lack of a better word. Um, I read the reports, and I'm like, that's not good enough. That's not good. I use it for macro. I use it for micro for different companies, and I did not see it being useful even once, which is amazing. Like you would at least have like not once did I think that this was better than what a human analyst can produce or what I can produce. So it was more like this is the kind of thing that you would see from an average investor. You know what I mean? Like a kind of thing average, like it's very superficial. It's got the theory right, but the assumptions are kind of like not baked fully. There are obvious shortfalls, which a human would be able to identify. A trained human would be able to identify, and so it's like, what value does that provide? Um, so I just don't think they're there yet. Can they be there in the future? I don't know. I mean, I just don't. I think the pace of progress in AI models has really dramatically slowed down in the last couple of years. So yeah, you can produce something that uses 1,000 times more tokens or whatever, but if the value provided is not 1,000 times higher, or even 10 times higher, or even 2 times higher, then who fucking cares? Nobody's gonna adopt those models. Um, I mean, we see this in hard data too. Like this is my hypothesis, and the hard data proves it, supports it. So, how many people are paying for Grok? I bet you it's not more than a few million, if that. How many people are paying for ChatGPT? Um, are the use cases increasing? I don't think so. Not as fast as it did in 2022. I think the growth rate has dramatically slowed down. And if you look at ChatGPT, OpenAI stopped announcing how many people subscribe to ChatGPT because the free models are just as good as the subscription models, which are supposed to be using 1,000 times more tokens and better and everything. It's like have the high IQ of like 125 as opposed to 120 or 110. Well, until some people are able to create companies that are kind of like trillions of dollars of value because they're using the top models as opposed to the second best models, then it doesn't matter. It doesn't matter.
The same thing has happened in software development. There are companies that are promised like, they're gonna replace senior developers, and now they can't even replace juniors. I mean, a junior is not very, it's somebody who's just starting out. So, I mean, because it can't reason, that's the whole thing that keeps popping up. Since it can't reason, it can't replace even a low-level junior employee.
Yeah. I think these things will make good, trained, motivated humans better for the next decade. A lot. Like people who actually adopt these things in ways that most people don't. Like I know people who use the LLMs like hundreds of times an hour, and I know people who literally swear them off, like they will never use it. And when you ask why, they're like, we like kind of dig into the reasoning of it. They give you some bullshit excuse, but when you dig in a little bit more, they kind of realize they're afraid of LLMs. Most people are afraid of AI. So if you're afraid of something, it doesn't matter how good the ride is. If you're afraid of the ride, you're not going to get on it. You know.
Yeah, I think it's an excellent tool to use, especially if it's something you're very good at, you're expert in the field. You can just use it to look up stuff and remind yourself. So it's a good
I
tool.
use them all the time. I love them. I actually use all three top ones. I pay for all three, and just for testing purposes, really. And yeah, I'm actually adopting some of these things. It's just that I'm not seeing anybody else doing the same.
I have a question in regards to AI.
hmm
So, as these models are so enormous, you're giving them such huge amount of data. How do you know that it's getting better every time you train it, which costs a huge amount of money? How can you test it because it's so much data? How do they know it's better? Because we've seen that many AI models peak. It looks like FSD is also peaking at around 97, 98%.
No, I don't think speaking. I think the 90 right now it's at 97 and a half. I think it will continue to improve with each update, each major update. So FSD 13 to 14 to 15 to 16. I think these dot updates and minor updates in between are going to go like 2 steps forward, 1 step back. They try different things. They send to different crowds, different geographies, different cars, different hardwares, etc. But it's not it's not the accelerating exponential type of thing that we've seen so far. And I don't know if that's ever going to happen. I think it's more like inches by inches, solving this problem, solving that problem with like talented people with a lot of capital and time in their hand. And I think that process is just going to take another decade or so. And the problem is BYD and a couple other Chinese automakers are already including their systems for free on all cars. Okay. So in just 5, 10 years, we're looking at a situation where there are hundreds of millions of cars with extremely advanced ADAS systems that are selling for $10,000, $20,000 around the world. In 10 years, you're going to see hundreds of millions of cars that are selling for $10,000, $20,000. Now, we were thinking of a situation 5 years ago where Tesla was going to have the robotaxi technology ready, a million robotaxis ready to go in 2020, and the alternative was 30, 40, $50,000 cars with no advanced ADAS system, just cruise control. At that point, obviously, you would get a societal change. Like some people would drop their cars, buying cars. Some people would sell their cars and not buy another car, instead start using robotaxis. But the current landscape is looking very different than that. We're looking in 10 years when FSD robotaxi is good enough, 99.9999%, so 6 nines accuracy. At that point, it's looking like there's going to be the second best is going to be hundreds of millions of cheap Chinese cars with very advanced ADAS systems that can basically do the same thing, and it's your own for $10,000. So in that case, what is the value of robotaxi? So now you have a bit of a prisoner's dilemma here. You have a bit of situation, a bit of a game theory situation. So if that's the outlook, why should Tesla invest tens of billions of dollars that would take to develop this technology even further? And it's going to take nearly $100 billion to develop this technology for Tesla because they're going for level 5 with vision only, as opposed to others are going for extremely good ADAS on a very cheap cars with LiDARs that have also declined in price way faster than people realize. There is one way. I think there's one way, and I only see one way. Tesla can actually win this race, but that is not going to happen for the next decade. Maybe in 2030s, Tesla can win this race that I don't think others can replicate. But it's not going to happen for the next 5-10 years. And that way requires perfect execution with a motivated Elon Musk. And that's neither of those are true today. XT?
So we keep mentioning these Chinese, and I mean, I've looked it up. It looks quite good, but are there any numbers or how good they are on miles? Because I mean, the only thing we can find from Tesla is the FSD tracker. Waymo is in 16,000 miles per intervention, which is probably the best. So, do the Chinese provide any numbers? I haven't found anything.
Yeah, I don't know. I'm not aware of an FSD tracker type of thing for Chinese automakers, but I've seen some videos, and you've seen what's that guy Kyle's video in a Chinese car going through a very congested center city, and it seems to be doing fine. And that's today's technology. Those lidars are going to continue to come down in price, and BYD is now introducing them to millions of its production vehicles. And BYD's history shows that they don't really do things, like they don't really promise things and not deliver on them. Most automakers don't. So if they're introducing them and including them for free on all their cars, that means the cost is probably much lower now than people realize. Tesla bulls realize. And yeah. And then on the other hand, level 5 side of things, we have Waymo in the US. And Waymo is now expanding they're going to be in about a dozen cities by the end of this year. And they're giving millions of rides. So we also have existence proof there as well. And people think that their costs are high, etc. But we know from China that LiDAR costs have declined a lot. We know from Waymo that they are reducing their sensor counts. We also know Google is vertically integrated into AI research, and they produce their own TPUs. They do their training on their own TPUs. They're way more vertically integrated than Tesla is into AI. They have DeepMind and everything. So I don't know. All the pieces are shaping up as if Tesla is not going to be the winner for the next 5 years at a minimum. And if Elon goes back to Tesla, gets another pay package, and is like super motivated in his late 50s and 60s, then there's a way maybe they'll win. But that's just a very small chance. And no one's been talking about it. So I don't see how Tesla stock doesn't drop below $100 per share. I just don't see how that's possible right now. And I don't see how Tesla China is going to survive. They don't make any money. They lose money even with full factory at full capacity, and that capacity is going to decline as Tesla continues to lose market share to BYD and Xiaomi. So and others. And to the extent that some people want 5-minute charging, BYD is not producing them. To the extent that some people will want battery swaps, Neo and others are producing. CATL is now going to battery swaps as well. And BYD is building its own charging network. And the overall automotive market in China has come to a grinding halt. Like it's not really growing anymore. Meaning, this era of all rising tide lifts all boats. Even though there are thousands of EV companies, is over. Now it's just kind of, I'm going to take your market share. You're going to take my market share. And Tesla is not well positioned for that kind of market in China right now. The new Model Y, 3 months after production starts, not even 2-3 months, I think 2 months after delivery start, they're having to introduce 0% rates to push middle. And so how in the world, sorry, Mike, I just saw your request. I'm going to send you an invite. How in the world is that a good signal? That you have to basically give away financing and cut prices on your new product 2 months after delivery start. And the new product is $10,000 more valuable if you look at the components they added. than the old one. So what does that say about the next year of that product? The new Model 3 is already outsold by the SU7. So the combined 3 and 7, 3 and Y, which are already unprofitable vehicles, and now you're having to do 0% interest rates, it's gone. Forget about it. They're gone. Tesla China is gone. That's not coming back either. Ekti?
Yeah. So what do you think about the benefits that Tesla has all these cars collecting data so they can mitigate the edge cases that happen in everyday traffic? What do you think about? Is that the
I
benefit
mean,
they
you
have?
like Elon says that, and Elon 5 years ago used to talk about how they're collecting miles at orders of magnitude faster, and if you add everybody else, and Tesla still has like orders of magnitude more day miles collected and everything. But look at and at 5 years ago, others said like Cruise and Waymo said, not all miles are created equal. And look at the result. Waymo has a growing service. With LiDAR, which was also kind of dissed by Elon. And Tesla doesn't. And Tesla is nowhere near a service. Like this idea that they're going to start in June is ridiculous. You know, they might have 5 cars going in a kind of pre-mapped route like they did in the at that Warner Brothers studio. But like, who cares? Waymo did that 10 years ago. You know, so what he like the another danger signal here is that his predictions have not come true. Elon's predictions have not come true. And the other side of these arguments have won so far. And another signal is that I literally said in November, I think, I said FSD 13 is going to go wide by spring. Okay. Wide meaning majority of Teslas on the roads, not wide meaning Omar has it. Okay. And at that point, when that happens, we'll know what the performance is. And I predict it's going to be approximately 98% of trips completed without a critical disengagement. And that's exactly what happened. Not even, because the FSD tracker shows 97.5%, but it's only limited to hardware 4 vehicles. And when I made my prediction, I didn't even assume that. And it's still not on majority of vehicles, I don't think, unless hardware 4 vehicles are majority vehicles in North America. I think they're kind of like even. And so I said by spring, and we're spring, March 21st, around the corner. And 97.5%. That's exactly what I predicted. And I guarantee you, FSD 14, and I said we're gonna be hearing about FSD 14 by then, and we're hearing about FSD 14 now. FSD 14 is gonna have let me think. It's gonna have 99%. Just a little less than 99% of trips complete without a critical disengagement. That's what's gonna have. This is nationwide. Okay. Now let's say Austin is at 99% today, which is possible, right? They have more cars, they have the headquarters there, some engineers there, the roads are better, the weather is a little nicer, the roads are a little better, the infrastructure is a little better. So let's say they're at 99, and they get to 99.9% next year. Okay, so 1 out of 1,000 trips makes a critical disengagement. And if you have a dozen cars, that means an accident every couple of months. If you have 100 cars, that means an accident every couple of weeks. Who in the world is going to want to get into that? So I just don't think it's going to happen. And if it happens, it's going to be a low speed limit, like 25 miles an hour, 30 miles an hour, at a predetermined route. And it's going to take years to expand that into the greater Austin area and then include highways. And only at that point, people will even consider getting into it. And by then, you have Waymo operating for 3-4 years in Austin. building its client base. People have downloaded the Waymo app, and they're already paying less than Uber. You can't call no Uber network. So why in the world would someone get into a Tesla? And not to mention, most ride-sharing demand is in center cities. Most ride-sharing demand is in center cities. Okay. And most Americans in center cities are liberal. Those are two facts. So even if you assume that these people don't burn the robotaxis down, they still won't want to use it. You think they're going to forget the emotional reactions they're having this year in 2, 3 years? It's not going to happen. I don't see Tesla's robotaxi service being successful in the next 10 years at a minimum, if ever. Ekti?
Also, if you look at the numbers in the cities, I think it's 60 miles per intervention on hardware 4. So, I mean, highways and inside of cities is quite different. So they're even further behind.
Yeah. I mean, there's a lot of video on YouTube. How many views does it have now? Came out a couple days ago, and it now has 14 million views. And it's been quoted everywhere. So, people say, he used FSD, autopilot, not FSD. It doesn't matter. It's the same fucking perception model. So, it doesn't matter. NVIDIA stock down 2%, so he didn't say anything material. Apple down 1. Carvana is down 10% today. Look at that. Meta down 4%. Tesla down 6%. XT?
So, I know you haven't been positive. You've actually been quite negative of Carvana. I think you're shorting it, right?
Mm-hmm.
I think that company is going to survive, right? Because I don't think their business model is working, and now they're trying to restructure the business model. So I mean, if that succeed, maybe they'll make money in the future. But I don't think it's a profitable business, right?
Yeah, I don't know. I think they're exposed to some of the macro headwinds, but yeah, I don't really have a view on whether they're gonna. I mean, they're not gonna generate a lot of money, even if they survive. I don't really have a view on whether they're gonna survive or not.
Have you noticed that so many companies have boomed during these 0% rates, and once you push them up, they're all like have to show profits, and they don't have money, so the stock keeps declining.
Yeah. All right, let's read this article. Xiaomi raised its 2025 delivery target by 50,000 units to 350,000. The company also announced that the production capacity increase is going smoothly. We're making strong progress in ramping up production, and we raised our 2025 delivery target accordingly, posted Li Jun, Xiaomi's CEO, on Weibo. Xiaomi sells only one model, the SU7, and has only one plant. The Beijing facility finished construction in July 2023, and mass production started in March 2024. It added a second shift in May last year, increasing daily operations from 8 to 16 and monthly production capacity to nearly 20,000 vehicles. The 720,000 square meter plant in Beijing started construction in April 2022 and was completed in 14 months. However, this was only the first phase. The second phase is adjacent to the first and covers a smaller 530 square meters and will produce Xiaomi's second model, YU7 SUV. Construction started in September 2024. Earlier today, Xiaomi delivered its 200,000th car, the SU7 sedan. The company announced today it took 229 days for the consumer electronics giant to deliver its first 100,000 cars and only 119 days to deliver another 200,000. Now, look at Tesla. Tesla produced its 100,000th car. Let's see when that would be. So 2013, I think, did about 20,000. 2014 maybe increased a little bit. 15, that was before Model X. It's really with Model X they increase again. So I don't know, say like 2017, maybe Tesla produced either late 16 or 17. Tesla produced its 100,000th vehicle. So that would be they started in 2011 with Model S. So that would be 5-6 years, and these guys did it in 229 days, less than 1 year. And this is in line with other data points that I've seen from other Chinese automakers. They ramp production at multiple times faster, 5 to 10 times faster than Tesla. Okay. And Tesla's supposed to be the best in the US or in the world. That's just not true anymore. And the second 100,000 units took 119 days. And I guarantee you, with the YU7 sedan, once they start exporting, these guys are going to get to 1 million units per year level. And where is that market share going to come from? It's going to come from Tesla in China. The SU7 was launched on let's see. SU7 was launched on March 28th in 3 variants, which were later joined. We were joined earlier this month by a 4th variant, SU7 Ultra. SU7 Ultra is a performance version of the SU7 sedan, so that kills the Model S demand. Despite being on the market for about a year, the Xiaomi SU7 still maintains strong demand. SU7 Pro is effectively sold out for 2025, as waiting times are currently 43 to 46 weeks. They sell 3 basic variants in the price range of $29,000 to $42,000. They sold out SU7 Pro mid-trim with a 94 kilowatt-hour battery from CATL. Route for 830 kilometers under CLCT conditions. So that's 500 miles under CLCT. So call it, I think it should be about 400 miles for EPA. Let's see, 500 CLCT. How many miles is 500? 830 kilometers. 1 second. Convert 830 kilometers CLCT to EPA in miles. 396.5, which is what I said. I said 400. Okay. It features 2 NVIDIA Drive Orin X chips with 508 TOPS computing power. The price tag is $34,000. Yeah. I mean, that's wild. You have your 400-mile range, you have your price tag at $34,000, and you have your compute power and the 220 kilowatt motor. That's wild. Like, why the hell would someone buy a Model 3? That's more expensive, less range, and it's not Chinese. So I think the shift from Model Y to YU7 in public perception is going to be much faster, and I think it's already started even before the YU7 has started production, and that's why we're seeing Model Y sales not taking off in China, and Tesla having to introduce a 0% financing push metal. XT, and then we're going to call it a day, I think.
So what do you think is going to happen to the German manufacturers as these Chinese EVs start coming into the country, especially in Europe?
Yeah, that's the problem. That's the problem. I mean, we don't have to rehash that. I think everyone knows that point. NVIDIA stock is down 2.4%. Tesla's down 5%. XPeng is down 8%. I think we're gonna have to go through a round of massive bankruptcies from these car makers, including Rivian, most of the Chinese automakers, and some of these legacy automakers from US. And that's the only way. And that process is gonna take many years. And before that happens, the Fed can't lower rates, and you know, Tesla can't take new risk because they have to focus on survival right now with their clean balance sheet, and the stock price are going to come down. The mindsets are shifting from growth stocks to value stocks, and that's going to continue for a while. All right, thank you very much, everybody, and I will chat with you all next time. Take care.